what would you recommend to her in terms of talking to Jerry before the attorney comes to the house?
Clearly they have not talked about this a lot, even with his health scares, even with his near misses. And I'm always concerned about avoiding talking about this because when someone's had a near miss, their perspective on life has changed a little bit. They might really be open to talking about. So if we brought you home and we needed medical equipment, like a hospital bed, what room would you want that in? And I'm speaking out loud to anybody who's got their bedroom on the second floor. Anybody who has their bedroom on the second floor. It's a beautiful thing. I get it. But you may have to start thinking about what that looks like for you in your future.
Did you plan for this, or did you miss when life demands answers you can't dismiss? Will you be ready when the trumpet blows? Do you have the blueprint for life's unknowns?
Hi, Ron.
Hi, Marguerite. How are you?
I'm good. I'm
Yeah.
good.
Did
Yeah.
you have a good drive in to the studio?
Yes. I love this studio.
I do love the studio.
Yeah, I feel really comfortable here. It's
Yeah.
awesome.
Yeah.
Um, Today we're going to talk about Lila and Jerry.
Okay.
And this story is called It Is About Time, Lila and Jerry. Lila had just turned 82 and celebrated with a girls' golf day. Listening to her friends talk about their planning and obstacles got her thinking about her plans. She had spent the last 10 years caring for Jerry, 87, her husband of over 6 decades, as he navigated his health challenges, in and out of the hospital, long waits in the doctor office lobbies. They often reminisced about the life they built together, their first home, the laughter of their grandchildren, and the countless ordinary moments that felt extraordinary. She decided she wanted to be sure of what would happen if something happened to Jerry. They had plenty of near misses, and now was a good time while Jerry was feeling good. The last time Jerry was in the hospital, he signed some documents there, but she didn't know what they were. She started by sorting through a filing cabinet in Jerry's home office. Lila found what she was looking for, an old envelope marked estate documents. Curiosity piqued, she opened it. Inside, she found papers she hadn't seen in years. There were wills, trusts, and lengthy notes that Jerry had drafted, but as she read, a sense of unease washed over her. The documents were much older than she remembered, and some vital aspects seemed to be missing. Concerned, Lila came to Jerry, who was sitting in his usual armchair, flipping through a magazine. Jerry, she said, trying to keep her voice steady, when was the last time we talked about our estate planning? He looked up, eyebrows knitted in confusion. Our estate? Oh, that's all sorted out. I took care of it ages ago. But the tension of the moment grew as Lila pressed on. No, dear, I think we need to look at it again. I found these documents. They are more than 25 years old. Lots has changed since then. One of our kids got divorced and remarried. 2 grandkids have been born and are in college. There might be other changes. I don't know. Jerry's face fell. Lila remembered how difficult it was to get Jerry to go to the attorney in the first place. Lila felt a mix of anger and despair as she watched the worry etch deeper lines into his face. Jerry, Lila said, I'm going to call the attorney's office to see about updating these, as she shook the old packet of papers. Jerry asked, what if he's dead? As Lila called the number on the yellowed cover letter. Someone answered. Lila asked to speak to the drafting attorney and was told that he retired last year, but Lila can have an appointment with the attorney who bought the practice. Lila felt relieved and made the arrangements. The woman on the phone found Lila and Jerry's file. The attorney was coming to see them next week at their home. Jerry was glad the attorney was coming to them rather than going to the attorney. After all their file statements and stuff were all here at home, and home is where Jerry likes to be.
Do you find that reasonable that the attorney would come to the home?
Actually, a number of my attorney friends go to people's homes to visit with them. There's something to be said for being in a familiar environment where all your stuff is. And the attorney actually would get a chance to see how this person lives. To be allowed into someone's home is a true privilege. It's a very trusted thing. And a lot of us don't think our home is enough. It's not clean enough. It's not decorated nicely enough. It's not new enough, whatever our stuff is. But the thing is, that's our home. That's where we live most of our lives. And so to have the attorney come is a real blessing.
If you were Lila's girlfriend having tea or having coffee in the morning, what advice would you give her so that her wishes are heard over Jerry's?
Ooh. I don't know if they'd be over Jerry's. I think what would really happen is that Lila would get a chance to update, right? Oh, we've had a couple more grandchildren. Oh, these things have happened since 25 years ago. And a good attorney is going to read between the lines and ask more questions, because it is true that both members of the couple are equally represented. And typically, especially in California, an attorney might have the clients sign a waiver with an understanding, or maybe this is part of the engagement letter, where we're agreeing, if we're a couple, right, we're agreeing to have the attorney work with us to get our estate plan done. But in case there's an argument between the two of us, oh, the attorney's out and is not going to represent either of us.
Correct.
Right? That's kind of part of how we arrange for representation.
Then again, going back to Lila and the is there inherent conflict between the two of them to get resolved in the sense of their needs and wants? So you have a new attorney who's
Right.
never heard their story before.
Right.
So I always hear the words, we can't do an amendment because it's so old, it's so dated. We are going to redo the entire trust, which
Right.
again is dollars and cents. So I think the audience would love to hear that for amendment versus the new trust.
Okay. So the words of art that we're going to share today are amendment and restatement. Okay.
Yep.
So I have a trust document. Here's my trust, right? I have all the papers in one place, and it's pretty good. But now I just want to add some beneficiaries, and maybe I'm going to change the percentage now, because I'm not changing anything else. My address is the same. Everything else in my life is the same, except I'm going to add a couple of people. We would do an amendment. That means that we have the trust, plus now we have another document that is the first amendment. So we can't look at the trust without its first amendment so that it's a complete document.
The amendment overrides.
It's going to say which article it's replacing.
Okay.
It's going to say something about what has changed in the main document. It is not a standalone document, right? It has to be with the trust in order for all this to work. Can you imagine a 13th amendment? I've seen this document. Okay, so now amendment number 1 was just to change a couple of the beneficiaries. Amendment number 2 changed the beneficiaries back to the way they were before. Amendment number 3, and you get the idea that now, in order for someone to administer this trust, we have to really figure out what happened first. Where is everything? Which article was changed? And a restatement might cost more than just an amendment for 1 or 2 topics. But once you get past the 3rd amendment, now you're really hoping somebody else is keeping all your puzzle pieces together. And it's kind of like having your puzzle pieces in a bag instead of having them on the table in order so you can see the picture, right? And every time you talk about the trust, you have to reassemble the puzzle and put it all on the table again so you can see the picture. So when an attorney offers a restatement, that means that we're going to take the same trust. It keeps the same name. The name of the trust doesn't change. And now you are restating the trust. And now it's one document. Now, some people recommend keeping the old version of the trust. If you're in a habit of updating your estate plan from time to time, it makes sense, because if there is litigation, if it does go to court,
There's a history.
There's a history. There's a history. And how nice for Lila and Jerry that the attorney's office still existed, that the retiring attorney had sold his practice to someone else who took it over, and their file was there.
Yeah, I'm going to just push back a little bit on that. If I'm the new attorney on board, why didn't I not reach out to Lila and Jerry to say, hey, it's time to come in and visit? I mean, if I'm Lila, do I go, I'm a little skeptical of this, or should I be interviewing more than one attorney now that I have no relationship?
That's a really hard one, because now picture these folks have been married 60 years. Okay. And what if the letter was received, but it was when Jerry was in the hospital?
Who
So,
knows if you got
but
it?
there's another layer that we need to understand about our attorneys, my colleagues here in California and probably elsewhere across the United States. And that is that they are discouraged from soliciting. Okay. An attorney is not going to call you up and say, you need to come in and get this done. Think of them more as a very intelligent, well-trained servant. Really.
Okay.
Well,
Yeah.
I'm paying their fee. They are advising me. They are not the decision maker. Okay. They don't have that liability. Their work is in the work that they do at my instruction. So I go to my attorney and I say, I need to update this trust. And the attorney's going to say, ooh, you've got like 3 amendments already. It's probably time to do a restatement. Oh, how much is that going to cost? And we have that conversation. But it's so worthwhile paying for it because now I have a really neat and tidy way to administer the trust. All the puzzle pieces are visible on the table. And that's so important, especially if you're asking a family member or friend to be your trustee.
So how often in the normal course, is it like when an event occurs or every 5 years or whichever comes first?
So we're talking about
looking at the trust and pulling it off the shelf, wiping the dust off of it. Because again, how many homes have we gone into where literally, where is it?
Yeah.
Go find it. And then the dust, is that thick.
Independent Trustee Alliance is a proud nonprofit sponsor of Plan for This. If you are considering serving as a trustee, please visit trusteealliance.com to learn more about this complex and sometimes overwhelming job. Trusteealliance.com. Plan for This thanks the Estate Sale Warehouse for all their amazing service and support. Entire home cleanouts, inventory, appraisal, auctions, sale of fine art and classic cars. Learn more at estatesalewarehouse.com. Has it been in your experience, Ron, that people hide their estate planning documents? Like I've had people who've hidden their estate planning documents like under their TV. It's in the entertainment center, but it's under the heavy old-fashioned TV.
Right.
Or it's in a filing cabinet they haven't opened in years, or it's tucked in the kitchen. My favorite place was the junk drawer in the kitchen.
I don't want my kids to see it.
Right.
So what's been the communications with the Lila and Jerry children and grandchildren as to have they named the successor trustee?
Well, before we move on to the kids and they're dealing with this, let's go back to a schedule for updating your estate plan. Because yes, every 5 years seems very reasonable to me, age 30 to 55 or 60. And you have to be the one to initiate the call. The attorney's not going to call you. One of the things we're developing at planforthis.com is a way to get you on an accountability program. So that way you can actually set a time that you want to be reminded and we'll remind you. Okay, that's pretty awesome. But at the same time, in terms of life, yeah, there are lots of life events where you might want to update your documents. Divorce is a big one. Okay. If you refinance your house, you might want to visit with your attorney, at least by the phone, to say, we refinanced, the escrow company made us take it out of the trust so that we were named individually in terms of the loan and the refinance and so on. But they didn't put it back in the trust. Attorney, dear, could you please put it back in the trust for us? You might be able to do that yourself. Sometimes there are forms that you can fill out with the county. So however it needs to be, you get that house back into the name of your trust. But there are other events, your own divorce, your child's divorce, people move out of state, rules in different states apply to your estate plan potentially. And here's the other thing too. That's just what's going on in your life. Births, deaths, things like that. But in the meantime, the legislation keeps meeting and they update the laws. And then there are court cases where case law gets changed over time. And this is part of what your attorney's job is, to pay attention to those changes.
You have read thousands of trusts in your career. One of the areas that I see mistakes made is when people put in an actual like $5,000 of rather than percentages, because obviously, as we know, with inflation, types of things like that, is $5,000 20 years ago, 30 years ago meant something. $5,000 a day may not be as meaningful. So talk about, I think that's an important aspect of when you update your trust or do a trust in terms of percentages versus dollars.
So there's a few different estate planning concepts that you bring up with that particular question, Ron. One is when we make distributions, this is after the death of the second spouse, right? Because everything is for the trustors, the people who created the trust. It's their money first. And so now we're going to make distributions. If we do it as a percentage, and you have $10,000 left when you die, or you have $100,000 left, or you have $100 million left, percentages make a lot of sense, right? All the expenses of administering the trust come off the top. The last ambulance ride, the funeral expenses, paying off the mortgage, whatever's required in terms of the trust. Everyone's a little bit different. It should be your personal document, right? And so that stuff comes off the top. And then we make distributions to your beneficiaries, the people that you picked to benefit from your estate. But when you do specific dollar amounts, you may not have enough to cover those specific dollar amounts. And I want to remind everyone that your estate plan is really a if this, then that. You know, if I end up with less than the total amount available to pay these specific dollar amounts, then it goes to a percentage calculation. Would be great to see in more documents. So again, I'm not giving any legal advice, but I am recommending that you talk with your attorney honestly about what you have, how you feel physically, mentally, emotionally, in terms of your family and your expectations, because there are ways to do it so that everyone is treated fairly, but it is your money.
Going back to Lila, would it be what would you recommend to her in terms of talking to Jerry before the attorney comes to the house?
You know, clearly they have not talked about this a lot, even with his health scares, even with his near misses. And I'm always concerned about avoiding talking about this because when someone's had a near miss, their perspective on life has changed a little bit. They might really be open to talking about. So if we brought you home and we needed medical equipment, like a hospital bed, what room would you want that in? And I'm speaking out loud to anybody who's got their bedroom on the second floor. Anybody who has their bedroom on the second floor. It's a beautiful thing. I get it. But you may have to start thinking about what that looks like for you in your future. On a different episode, we talked about your dad refusing a stair lift. You know, that's not uncommon, right? We don't want to be embarrassed by our limitations. But I'm saying embrace your limitations because the efficiency you gain in not fighting it could be really great. And it's a personal decision. I know that. But I've worked with care managers, for instance, that have gone into a home to do a safety assessment long before anybody needs any care or they don't need a caregiver today. But practicing is a good idea. You know, it's important.
When would you recommend they get the family members involved, like naming the successor trustee? Is that before and so that the attorney is the more efficient and effective, or is that an after discussion in terms of once they have that discussion with the attorney of who's going to be there, or do we name that third party independent trustee?
So I have some pretty strong feelings about my own estate planning. I love my children. I love my children so much that they will never, ever, ever be my trustee. Never. You know, I have 2 boys of my own and I have 4 stepsons. I love all of them. It would be very difficult on their relationship with each other to make any one of them the trustee of a trust, whether all 6 are benefiting from that trust or only 2 or 4 are benefiting from the trust. So their brotherhood means so much to me. I would never do that to them. And I get it. A lot of people, we love to think of ourselves as kings of England. We love to think that, you know, we are passing along our legacy by making sure it's our child who administers the estate. But I just want to pull that apart. I want to pull apart the idea that the business of your life needs to be completed. The accounting, the transactions, the tax, financial, legal issues all need to be sorted out. That should probably be done by a professional. On this side, you could actually have somebody be your agent for healthcare. And that somebody could be a family member who loves you very much, but understand they have a natural conflict of interest. The more spent on your nursing home, the more spent on your care at home is less for them. And so you're really putting people on a spot, even though, of course, we all say that wouldn't affect our decision making, even though it's hard to believe that your child might be affected. So don't blame your child, blame their spouse. You probably didn't like their spouse anyway, and you're worried about them getting married. So just know there's a lot of cooks in this kitchen if you have family involved, and you can, of course, that's normal. That's what's happening, but it's not what I would recommend.
Going back to Jerry, I mean, I can kind of see Jerry. I mean, we've all met Jerrys before in our work and our life and our experiences. How, if he just says no, what are the risks of this? And something happens to Jerry, what are the risks?
So you're saying we have a 25-year-old estate plan. Okay, so let's make it clear first. I've not read their estate plan. I don't know what it says. And I don't know who's named to serve as their successor trustee. Let's assume it's going to be one of their kids. And also, we don't really know anything about their kids from this case study. So we can make a couple of assumptions so we can talk about this, right? They have 2 daughters. So one of the daughters is going to be made the successor trustee, and the second daughter, the younger daughter, is probably going to be the backup to the first daughter. First daughter has this job she doesn't know anything about. Has Jerry talked to his daughter about his expectations for how she would run his investments if he wasn't able to do so? Probably not, right? So one of the concerns that I have is Lila's already identified that there have been a couple of grandchildren that are not in the estate plan at all. They're not named at all. Does the language in the document say, oh, and any other children born of my children are my progeny? Are there any words there about possible additional children? Is there any contemplation of divorce? So here's the thing about trusts that a lot of people don't know. When you create a trust, you're creating a castle wall around your money and your assets. And only a few people get access to that information of what's actually in there, and they get the opportunity to run or manage the assets that are in there. As an example, your trustee really needs to know everything, right? Because that's the person who's managing everything and figuring out the budget and figuring out what needs to be done. Do we have an ongoing trust? If your children might be prone to divorce, you might want to hold those funds in trust, and that way it's still your money, and the money goes to your child on your schedule. You mentioned 5,000, maybe it's 5,000 a month, or it's 5,000 a year. Whatever that schedule is, the trustee's job is to make sure that your child receives money like that. There could also be other reasons your child gets money, and we can go over that sometime in another show, but I just want to put out that concept. There are common standards in a trust like health, education, maintenance, and support. If the funds are requested for any one of those reasons, it makes the trustee's job easy to say, sure, you need a specialist for a doctoral procedure. Great, we'll send you the money for that. So holding funds in trust means creditors can't get to it. The divorce attorneys can't get to it. Medical bankruptcy can't get to it. So there are things to consider about how the trust will go. And we don't know in their trust what's going on, but I can tell you if it's 25 years old, a lot of things have changed since then.
In terms of the language that the attorneys used 25 years ago versus today.
Yes. Not only that, we've had a lot of cases come through that have adjusted the language that's used for certain purposes in a document. I can give you a bunch of examples, but I don't want to confuse anyone. Just to understand that the average person doesn't have enough legal knowledge to be able to draft their own document in a way that it will work later. And what happens when a trust doesn't work? It ends up in court, right? So if we're doing the trust to avoid having to go to court, because honestly, getting an estate plan done, even the restatement, which might be a little more costly than getting an amendment. And if you go to a new attorney, that new attorney cannot take the liability for the previous attorney's work. They're going to say you have to restate the whole thing. They're going to start from scratch. They're going to start, and they're going to use some of the things in there, but they're going to ask you questions about it because now they're building a whole new castle for you.
But if it's 25 years old and I'm really picking we're really going back in time when everybody was, and again, this is getting really into the weeds, but I think it's very important because there's a lot of people have the 25-year-old trust that was the ABC trust.
Oh gosh, yeah.
So if you go in, pull off your trust, if it talks about the ABC or the AB trust, it's a whole nother can of worms.
Let me give you a few other terms to look for. You're looking for a survivor's trust and a decedent's trust. One person's going to die first. That's the idea in a couple. And in order to capture as much exemption, as much relief from estate taxes, these mechanisms were put into for the trust administration to split assets, to pay bills from different checkbooks, depending on what the bill is. And even how the funds are accounted for are really affected by this language. It's not a bad thing, but may not really be necessary depending on your level of assets now. Keep in mind, our current estate tax exemption is over $13 million per person. But add to that, we don't know what's going to happen in Congress, and we don't know how the laws are going to change. So your document has to be somewhat flexible. And it has to be maintained because, well, when things change, our documents have to change.
So that's one thing for Lila and Jerry. I mean, that's really could be the eye opener right there. That this is it's a trust, but it's really be a non-effective in solving for the successor trustees to really do the work that they have to do.
Well, it's really true that we have to start with the documents as they are on the day that we become active. And I may not have explained this in a previous episode, so I'd like to. When does your set of documents go into action? Well, let's be sure. Okay, the pieces of paper don't do anything. It's the human beings that you pick to do the work. When do they start work? What's the most obvious way when they go to work?
Passing away.
Right. So when you die, that's the first, most familiar, most famous way that people then have to do the work that you set out for them to do. And they require a death certificate in order to do that work. The other two ways are a little less known. Incapacity is one of those. So incapacity means you're no longer capable of managing for yourself. And your document, your trust document, maybe your power of attorney for finance, maybe your advanced healthcare directive, because this is during your life. Those documents operate during your life. Might say one or two physicians not related to you who are licensed by the state in which you live, examine you, and then they have to write a letter that says these couple of sentences. So Ron is no longer capable of managing his own affairs. And now we have two letters like that. And I'm your successor trustee. Now I can go to work.
I have a question about that. It's kind of curious. If Lila and Jerry are trustees of their trust, they're both
right.
If Jerry falls into incapacity, does Lila become the sole trustee of the trust?
Well, again, it depends on how the document is written, but that's pretty typical. So now there's Lila as an elder herself, probably in need of extra medical attention herself, is now responsible for everything that happens in the household, all the bills that need to be paid, everything that Jerry did, Lila has to do. And yes, in this case, we're going to say, yes, Lila becomes the sole trustee.
But then, then going on to the third possibility.
So with incapacity, I just want to say this too, that the person who is incapacitated doesn't believe it, doesn't know it, doesn't agree with that. And it makes some things really tough to get done. And a lot of us would refuse to be seen by the doctor because we don't want to give up driving. So if the documents are dependent on you being declared incapacitated, there may be a big gap, months before bills get paid. Things that just don't get done, things that just don't happen because it's not an immediate position. And you should really ask your attorney about immediate versus springing. Springing means I have to have the doctor's letters. I can't do anything until I have them. And I would love to talk about that sometime when we can talk about immediate versus springing documents. I think that's a whole show. But just to get back to Lila and Jerry, the third way is resignation. That means that you can resign as trustee of your own trust. And you acknowledge that I can't really follow. I'm not getting all the details. I'm missing stuff. Wow, what a mature self-awareness that is, to be able to say, I probably shouldn't be the one driving. And now you have a DD, right? You have a designated driver, or you have someone that you picked and you wrote your instructions, and now it's time to trust them. I have a thought experiment for you, Ron.
Okay.
So you have your documents all set up and you've picked your successor trustee. Without any further instruction, I want you to give your checkbook to the person you named as your successor trustee. And the only instruction is this: you're handing over the checkbook. Pay 3 months of my bills, 3 billing cycles. Make sure all the bills are paid on time.
Who would I pick?
Your successor trustee, the person you named in your documents.
Right.
You're handing them your checkbook or your ATM card or however you pay your bills. Here's your cell phone.
So this is a trust test? Is that?
Well, what I really want you to look for is, how does that feel on the inside? Okay. You pick somebody. Your attorney you're sitting in the attorney's office and the attorney said, who do you want to have as your successor trustee? And you said, my eldest child, of course. Great. I want you to hand your eldest child your checkbook and say, pay my bills for 3 billing cycles.
Did you hear that?
How does that feel? Because if you have any hesitancy at all, I really want you to focus on that. Do you realize that your eldest child's actually going to hand it to his wife because she's really the one who pays the bills at home? Didn't your kid have a bankruptcy? Did your kid just sell his business and now he's traveling the world? I mean, who's going to do this, right?
That's a great test.
Yeah.
To find out who should be that successor trustee.
Who does your heart feel should be the successor trustee?
And that's different than healthcare. They can be two different people.
Sure.
Because some people are more sensitive to that than some people are better with the finances.
Oh, and some people are terrible in a hospital. I mean, you want someone as your agent for healthcare who's going to have some moxie. You got to have somebody who's willing to say, my mom has not eaten for 4 hours or something. She needs something now, right? You want someone who's going to be your advocate. So it's one thing to have somebody who might sign a form, but those forms become very important. They figure out who's liable for what, who's paying for what. How does any of this get paid for? So you can build a team. You have your successor trustee, your agent under the power of attorney for finance, and the executor of your will should all probably be the same human. And here's where it gets a little confusing. I want you to name people 3 people deep, right?
Let's go over that. I think that's very important that you really hone in on that. Okay, you named your oldest child, but?
Well, you got to have a succession plan. All of us are mortal. All of us are human. Any of us can become too ill to be the administrator or trustee. So what happens? And keep in mind those 3 occasions, right? When your documents go live, right? Death, incapacity, and resignation, that applies to your successor trustees also. But there's another magic word I need to teach you, and that is declination. Any one of those people that you name on the list can decline to serve. So that's not resigning. Resigning means you already had the job, and now you're saying, I don't want the job anymore. But there's also the possibility that any of the people you named on the list could say, oh, not me, and say, I decline, I'm not going to serve. So not only do you need 1, 2, 3 in the trust, 1, 2, 3 in the will, 1, 2, 3 in the power of attorney for finance, you need 1, 2, 3 in the advanced healthcare directive. And by the way, if you want to know more about these documents and basically what each of them does and how they work, visit planforthis.com. So
you've given the Lilas in our audience a lot to chew on. And a lot to discuss with Jerry and a lot to talk to about the attorney. And there are literally, as I say, most of the documents I see are 10, 15 years old. that have not been updated.
It was so hard to get Jerry to go to the attorney in the first place, right? Getting him to go back. But here's the mindset I want everyone to adopt. Estate planning is never one and done. Never. Okay? Our lives continue. Our lives continue to grow. Hopefully our family continues to grow. We have to just embrace that once we're on an estate planning journey, the stops along the way include visiting the attorney again. Is it every 3 years after you're 80? Is it every other year once you've have the privilege of being 90 or better? Maybe, maybe not. But wouldn't it be great to know that you could call the attorney and say, hey, has anything changed out in the world? Nothing's really changed with me. How are you? And the attorney gets to say, you know what? There was a possible law, but it actually got shot down. We don't need to change anything in your documents right now. Because that check-in phone call could save your family thousands and thousands of dollars, months and months, years of their lives.
And just grief of tearing a family apart.
Yeah. We'll have to talk about that in another episode.
But plan for this, subscribe. You've just heard invaluable information as to how to make sure your family has Thanksgiving together for years and years and years to come. I know there's a lot of Lilas and Jerrys out there. We both see it all the time. We hope you will listen and share this podcast.
And I also want to say this too. You are the ancestor. You are the one right now who can make a decision that would affect your family's generational wealth. And that's a very powerful place to be. We are each a CEO of our own lives, and our lives deserve our attention.
Lila, go be a CEO. Thank you, Marguerite.
Thanks, Ron. Hey, Bill Murray, will you be ready when life asks, did you plan for this?
Money management and legacy. Will you be ready for life?